Our keynote address is by Ms. Stephanie von Friedeburg. Stephanie is the IFC's Interim Managing Director and Executive Vice President. She leads the implementation of IFC's strategy to create projects and attract private investment in developing countries while increasing opportunities for women, scaling up investments to fight climate change, and promoting digital development. She is also IFC's Chief Operating Officer and leads all investment operations and advisory services, managing 59 billion debt and equity portfolio in more than 100 countries. Ms. Stephanie began her World Bank Group career almost 3 decades ago and developed strong expertise in Africa and Central and Eastern Europe and in sectors such as telecom, manufacturing, and a wide array of technologies. Welcome, Stephanie. At the end of her note, Stephanie will be joined by Ms. Anita George for a Q&A session. Anita, who has been a member of the advisory board of WinPE, is the Executive Vice President and Deputy Head of CDPQ Global. She fills a key role in developing CDPQ's activities in its 3 priority international areas: United States, Latin America, Europe, and Asia Pacific. She actively participates in positioning CDPQ internationally, as well as developing and executing its globalization strategies. In addition to her role managing the international offices, Ms. George contributes to diversifying the portfolio by taking a holistic view in approaching the various markets. She sits on CDPQ's Investment Risk Committee. Her various roles have led her to work in several regions of the world, including Europe, Asia, Middle East, Africa, and Latin America. Over to you, Stephanie.
Rochelle, thank you very much. Good morning, good afternoon, and good evening to everyone joining from so many different time zones. Thank you, Anita and team, for the opportunity to speak with you. It's a pleasure to be here, especially now, given that the pandemic has exacerbated economic gaps between men and women and threatens decades of progress toward gender equality, a topic that is critical for IFC and for our development mandate. Let me first set the scene for you. Even before the pandemic hit, developing countries were losing nearly $48 trillion in wealth because of lifetime earnings differences between men and women. Gender gaps persisted in private equity and the venture capital ecosystem. Globally, just 1 in every 5 alternative asset professionals is a female, leaving women-led enterprises with less than 3% of the global venture capital. And while in emerging markets, women account for 11% of all senior investment professionals, in the VC and PE ecosystem in South Asia, they account for only 7%. And at the country level too, India's gender gaps have been widening. Despite robust economic growth, India's female labor force participation has dropped from 34% in 1999 to 21% in 2019, a significant cause for concern, with only 1 out of every 5 women in the workforce. Layer onto this the COVID pandemic, where early research shows that women's jobs are now 1.8 times more vulnerable than those of men. Although women make up 39% of global employment, this translates into women shouldering 54% of all job losses. One reason for this clearly is the increasing responsibility for family care, which is largely carried by women. In India, early estimates show that the COVID pandemic has increased the time women spend on family responsibilities by nearly 30%. We are also seeing that for women, the shift to working from home is more challenging, especially across low and middle income countries, where 300 million fewer women than men use mobile internet. These barriers are reducing women's ability to work remotely or access digital markets. The digital gender gap is the widest in South Asia, where women are 23% less likely to own a mobile phone than men, and 51% less likely to use mobile internet. And yet, on the upside, McKinsey data suggests that acting now to advance gender equality could be incredibly valuable, adding $13 trillion to the global GDP by 2030. So gender equality is not a social issue. It's an economic growth imperative, and it is central to our recovery strategy. At IFC, we believe there has never been a more opportune time to invest with a gender focus, and we are leading the way through a three-pronged strategy. First, we are pioneering research to gain true insights into gender investing, both in terms of building a business case and in addressing related challenges. Second, we are partnering with others to get it right. This is not a space where institutions can and should be working alone. And third, we are putting our money where our research is. Let me expand on the focus of our research. In 2019, we partnered with Rock Creek to publish a report on gender representation in the private equity industry in emerging markets. Simply put, the research demonstrated that gender diversity leads to better performing private equity and venture capital funds. In fact, we found that private equity and venture capital funds with gender balanced senior investment teams generated 10 to 20% higher returns compared with funds that have majority of male or female leaders. We also found a correlation between the number of women on investment committees and the amount invested in women-owned or women-led portfolio companies. This was the first research of its kind, examining over 700 funds and 8,000 portfolio companies in emerging markets. Then, to take this research into action, we published a gender lens investing guide together with CDC Group to advise our partners on how to consider gender throughout the investment cycle. This practical step-by-step guide focuses on how funds can become more diverse in their own workplace, particularly investment committees, and on how they can apply a gender lens in investing in and managing their portfolio companies. This type of research is key to successfully mobilizing our clients to integrate gender into their capital allocation process. But as you can see, it requires partnering with others, the second leg of our strategy. No one can move the needle alone. What yields the greatest results for IFC and for every organization and company is collective action. We all need to do more, and we all need to learn from each other, inspire, challenge, and push each other. So we are joining forces to co-develop ideas, build the business case for investing with a gender focus, and providing tangible recommendations to our clients. For example, to help address online access and usage gaps, IFC launched Digital to Equal in partnership with the European Commission. The 18-month initiative brings together 17 of the world's leading technology companies operating across the online marketplace to boost opportunities for women in emerging markets. Digital to Equal members have worked to expand opportunities for women in two ways. First, making measurable, time-bound, and new commitments specific to each company's goals. I'm proud to say that over 50 individual commitments have already been completed. And second, participating in knowledge exchange sessions to share practical information on how to put commitments into action. Stay tuned. Building on our Digital to Equal, IFC will be launching in May a robust e-commerce research report that highlights barriers and opportunities for women in e-commerce across Africa and Asia. Finally, putting our money where our research is, the third prong of our strategy. On the debt side, we have dedicated financing to women entrepreneurs through our Banking on Women program since 2006, and now have committed a portfolio of over $2.8 billion for women-owned small businesses through over 100 financial institutions. IFC has also been increasingly expanding its financial instruments. We recently invested $75 million in a bond issue of Turkey's Guarantee Bank. This was the first private sector gender bond in emerging markets dedicated to financing enterprises and companies owned or managed by women. Since last year, We've committed over $56 million in advisory and investment interventions globally to address gender gaps in private equity and venture capital financing. IFC has a portfolio of 31 funds in South Asia with almost $500 million committed, including an investment in India Alternatives 2 Fund and Multiples PE Fund 3, both women-led PE funds. We also piloted IFC's gender workshop for fund managers in India to enable them to identify gender opportunities throughout the investment cycle and within their teams and operations. By making IFC resources available and encouraging our investee funds to increase their gender focus, we can demonstrate the benefits of investing in women-led companies and focusing on the women's market. But we need to do more on the financing side, in particular for startup capital. As part of the Women Entrepreneurs Finance Initiative, or WEFI, we are working with the World Bank on a range of partnerships to boost gender lens investing through funds, accelerators, and incubators. Currently, only 11% of seed funding capital in emerging markets goes to companies with a woman on their founding team. Yet female-led startups can receive a significant increase in the amount of debt if they participate through an incubator, as much as 2.5 times more. So let me conclude. Like previous global crises, COVID-19 has been a harsh reminder of the undeniable fact women's economic participation is necessary for a resilient and sustainable recovery. It is up to us to make that happen. The private sector can help close gender gaps at all levels, in leadership, in the workplace, in supply chains, at the customer, and community levels. I hope that today's discussions will encourage all investors in attendance to direct capital towards solutions that drive gender equality and realize better returns. We at IFC stand ready to partner with you to help collectively achieve gender equity and ultimately pave the way for a better future for all. Thank you.
Hello, Stephanie.
Hello, Anita. It's lovely to see you. You look fabulous.
Likewise, and thank you so much for agreeing to be with us today. It's really an honor and a pleasure for all of us at WinPE. And I'm very proud to say today WinPE completes its 1-year birthday. And it's very fitting that we should have a woman leader like Stephanie von Friedeburg with us today. So let me kickstart our session. I'm just going to ask you some questions, Stephanie. The first one is, you mentioned a lot of statistics on women, which I think by now should be common knowledge, but worth repeating again and again. You also mentioned a lot of actions that are being taken by development institutions like IFC that work with the private sector, which is very, very encouraging. If you had the power to change one thing in favor of gender balance, what would that be?
So Anita, it's not going to surprise you that my answer says technology. If I could wish one thing, I would wish that we could create ubiquitous, affordable, reliable, broadband internet for all with affordable devices. And together with that, gender unbiased AI and algorithms, so that as we build the digital economy for the future, we create an economy that's gender blind.
Thank you. And just for information, I would like to share that Stephanie was a key player in the telecom business of IFC and really made many transformational investments throughout several regions in the world. So I'm not surprised by your answer, Stephanie. One of the things that you also mentioned is about women-led businesses. And I know that IFC has been doing a lot to encourage women entrepreneurs across the world. So the question that I have is, do you see global trends, patterns, and how do you think we can enhance and accelerate these trends in a very practical and
It's a great question, Anita. And sadly, I think because of the COVID crisis, we've lost significant ground. I read a UN Women report the other day that said when the COVID crisis is over, we may lose as much as 25 years of gains in terms of gender equality. And I think that largely has to do with women taking on more responsibility at the home relative to men. So I would say that in addition to continuing to provide access to finance for women, where there still remains a massive gap. I think in India, it's about $158 billion a year alone. We need to also focus on two other areas. First, we need to increase the amount of childcare that we make available for women. And we have first done some research, published a really interesting study. And I have to say, when the teams first said we're doing a study on childcare, I didn't fully connect why it was important. And yet when we finished our research, it really does demonstrate that we need to push all of our clients to help create opportunity and access to childcare for women. And then secondly, we need to think more holistically about not just funding women-owned companies, but helping them grow and grow beyond a one-person shop. The majority of, for example, in India, the majority of women-led companies are either informal or have only one employee, the woman herself. And what we really need to do is figure out how we take those and scale those companies. So they need access to financial planning, they need access to accounting skills, they need access to insurance. And one of the underlying kind of suppositions of WeFi was really, how do we grow that set of portfolio kind of advisory services that we can give to women? And I think that's where we really need to begin to focus to make more holistic interventions.
Thank you, Stephanie. One other question I have is that IFC has been a leader, and I would say a pathbreaker in terms of putting development at the heart of investments and working with the private sector. Can you tell us a little bit more about IFC's efforts in bringing other investors towards this common goal of gender balance?
So Anita, we make mobilization. So, we have two key pillars of our strategy. One is to begin to create projects where they don't exist in the world's poorest country. And the second is to figure out how to bring more and more investors with us as we venture to different markets around the world. And we've gotten to a point where we mobilize $1 for every dollar we invest. And our intention is to try to grow that higher than $1. We know from experience that there are pension funds, there are sovereign wealth funds who are sitting on the sidelines looking for yield, and there is no yield in the developed world. So the question really for us is, how can we create platforms and vehicles that will allow them to meet their regulatory obligations in the countries in which they're domiciled, while increasing their yield by coming with us into some of our markets? So we have our MCPP platform, where we have brought many insurance companies into our infrastructure and manufacturing and services, as well now into our financial institutions portfolio. And many of our mobilizations in financial institutions really are women-owned and women-led financing through financial intermediaries. So big piece of our business now is really focused on that. And then the second is the asset management company, where we bring outside investors into our equity positions via the asset management company.
Excellent, thank you. And one argument, Stephanie, that we often hear, and especially when we are trying to promote things that are not yet business as usual, is that there is a trade-off between adopting some of these measures which encourage gender diversity or ESG, and that it actually, the trade-off is vis-a-vis commercial or financial. What is your view and IFC's experience?
So Anita, we've been doing this since inception, and I think over our almost 70 years of existence, we have proven that you can do well and you can do good at the same time. And I fundamentally believe that there is not necessarily a trade-off. So ESG has been at the core of our work forever, and we've really been able to take our performance standards and bring them to the market via the Equator Principles and working with Equator banks. That was really the start. But then we said to ourselves, everybody's talking about impact investing, and what do they really mean? And so many different people were launching impact funds, and it was becoming impact washing, just like we had seen greenwashing with green bonds. So we created something called the Impact Principles, and we now have over 100 signatories and some of the biggest investors in the world as signatories to the Impact Principles. And it's really a beginning, Anita, because we understand it's a complex set of issues that people are trying to tackle, and different investors have different ideas about how they want to have impact. So the initial frame is to say the following: that when you make an investment, you make that investment with intent. So many investors were making investments and then backward looking and saying, okay, this has impact, therefore it comes into our impact fund. We actually say, make the decision that you're going to have impact up front. Second, tell the world how you're going to measure that impact. Third, get an external auditor to verify that measurement and that you're actually getting what you said you were going to get. And finally, exit with return. And now that we've done that and people are beginning to follow that pattern, we've started to go into different verticals to say, how would we measure impact vis-a-vis gender? And would everyone agree to that? Could we set standards for measuring climate? Can we set standards for measuring improvement in childhood education or childhood health? So we'll have to go vertical by vertical in terms of thinking through how we measure each one. But the principles themselves, I think, are a really good start.
Yes, I fully agree with you, Stephanie. And I actually remember during my early days in IFC, when we first started talking about performance standards and ESG standards, it seemed like we were the only ones out there, you know, in the wilderness of investments that talked about these things. But now we see more and more investors coming forward and incorporating either existing performance standards or creating their own standards that they are benchmarked and, as you say, verified and producing sustainability reports, etc.
I think ESG, Anita, is table stakes at this point. And how do we go beyond that, right?
Correct, exactly. And my question is actually linked to that, in that, do you see gender and equality and inclusiveness becoming as mainstreamed as ESG has now become?
I think it's getting there. And interestingly, I think COVID has really laid bare a couple of things. First, inequality. And we've seen it across the spectrum of gender, access. Access to education is a perfect example. I mean, I talked a little bit about, access to digital platforms, but Anita, today there are 450 million children who aren't in school because they don't have access to the internet. Half of them are girls, and we know that most of them won't go back. We could lose an entire generation of young women who don't get an education. So I think these kinds of things are going to come out. For me, the question will become, how do we balance all of the priorities coming out of COVID crisis in terms of everybody saying we need to build back better, we need to build back more resiliently, the substantive push for climate, and how does gender fall in that equation, and how do we make sure that it stays at the forefront? We've really done that through the commitments we made as part of our capital increase, where we committed to our shareholders kind of three things: do 40% of our business in the world's poorest countries, increase our gender lending, and increase our climate lending. So we leave those three KPIs as kind of the fundamental pillars of what we're measuring and striving for. And I'm hoping that other institutions will do the same so that we can bring and leave gender at an equivalent importance in relation to how we build back better.
Yes, absolutely true. And then my last question is really one to ask. While I know that IFC and a lot of the other DFIs have done a lot in terms of, supporting female fund managers, the gender lens investing, the 2X challenge, gender smart investing. One question I have is, where do you see the DFIs? Can they do more? And I include IFC as well as other long-term investors on converting some of what we are talking about on gender diversity and inclusion to actual action.
So Anita, we can do more and we must do more. And we are actually, so the 2X challenge was a really interesting challenge that the bilateral DFIs created. And we are now in the process of getting together through the constellation of the new G20 to ask ourselves, how can we set harder targets for gender investing and trying to continue to push the envelope. I think the other thing that all DFIs can do is look to our own backyards. So, in IFC, we've done well at the very senior levels at creating gender balance. But if you look deeper into the organization, we're still not at gender parity in all of our grade levels. How do we get there? And we are setting some hiring targets to try to push ourselves to gender equality at all levels in the institution. And the other thing we've done, which I would love to see other DFIs do, is that we set a goal that by 2023, half of all of our board seats would be filled by women. And when we set that goal, we were at, 28%-ish. And the number of managers who said to me, Stephanie, this just can't be done. And yet we're already at 42% and well on our way to 50%. And I would love to see some of the other financial institutions make some commitments like that, because again, that just indicates that both in our business, but as well as in how we're running our institution, we're thinking at both levels.
Thank you so much, Stephanie. It's really great to hear, and I think we do a lot leading from your example. Over to you, Rochelle.
Thank you, Stephanie, for this wonderful session. Gender focus is no longer a social issue. It's an economic imperative. And thank you for summarizing that so beautifully. And it's quite encouraging to hear 42%. And I'm waiting when we can get to that 50% mark with women boards. Thank you so much, Stephanie.